Everybody, welcome to Monday. The S&P 500 was down 0.9% today. We're supposed to be having this year-end Santa Claus Rally, and the market is acting more like the Grinch this year. There may be a reason for that. A lot of these very large mutual funds and pensions have targets for how much they want to have in stock versus bond. And when they end up with more stocks, because the bond market underperforms, like we just saw in this fourth quarter, they'll rebalance here at the end of the quarter and thus sell a lot of stocks. According to Bloomberg, there'll be $100 billion worth of stock sold by these big institutions in order to rebalance their portfolios. And so, we've got a situation very much like what we had at the end of the third quarter, where we peaked out in the middle of September and then dropped until the end. And then once we were done with that quarter, we actually ended up coming up and doing fairly well here for the fourth quarter. We're getting a similar situation here. We're peaking out in the middle of December, and maybe we continue to have some weakness because of this rebalancing activity. But I wouldn't be super concerned because it is temporary. Once they're done with the rebalancing, then we can get into what really probably will matter next year, which will be the earnings. If there's a recession, how does that impact earnings? What does the Federal Reserve do? Those types of things. Because it can go the other way. If the stock market underperforms the bond market, you could end up with a lot of money coming into the stock market too. So these things tend to work out over a period of time. I wouldn't overreact to what's happening here right now. So look forward to seeing what's going to happen tomorrow, and we'll talk to you then. Thank you very much.